Hey everyone, welcome back to Jesse's Lane. Just got a lot of good stuff here to talk about as we talk about this market rally that's going on right now. The Dow going up about 800 to 900 points right now. The last couple days, been a really nice rally, kind of unexpected rally if you ask me. Was kind of expecting some sideways trading all the way until this first rate hike, kind of see what the Fed was talking about, see if we can get a little slowdown in inflation, all that kind of stuff. But a lot of people just getting right in and buying the dip, especially in the NASDAQ sector. You saw stuff like Facebook, Snapchat, Twitter, that sort of thing. A lot of these things dropped. Facebook, for instance, dropped, I think, nearly about 28 to 29%. And now finally today, we're seeing a nice little rally. Snapchat was the exact same way. They dropped nearly 30% as well. Actually dropped around pandemic levels, in March of 2020 levels, I believe, whenever they went down to almost like $22 a share, which I remember seeing that during that time, and there was just so much uncertainty during that time. Obviously, I wish I would have given it a shot, because I do believe they ran up all the way up to $70 some, but I didn't get a chance to buy all that. Obviously, Tesla as well. I remember seeing Tesla sitting around 350. But anyway, so let's get into this market rally that we're seeing right now. Kind of see if it's going to last, and what else is going to have to happen for it to keep on going higher and higher and higher, basically. I really thought that there was just so much uncertainty right now between the Fed, people talking about GDP slowing down, that sort of thing, that we were going to get a nice sideways trade, basically until the Fed's second meeting. So the Fed will be meeting here March 15th and 16th. They will be talking about their first interest rate hike, I'm sure, and how much it's going to be. Now, there's a lot of talk about are they going to raise it, quarter basis points or a half basis points. So basically 0.25% or 0.5%. And from everything that I've heard from Jerome Powell, I believe that they're going to kind of take this a little bit slower. Now, that's just my opinion. That's kind of how I took his words. I don't think they're going to do a big rate hike at first, kind of cause a lot of panic, that sort of thing. I think he's really been kind of clear that they're going to be talking to us about what exactly they're going to be doing. And from what I got from Jerome Powell, from himself, I believe that it's just going to be a 0.25 basis point hike. So a 0.25% that I was talking about. I don't think they're going to do anything crazy, 0.5, unless we just start seeing inflation just going through the roof. If we start seeing month-over-month data, for instance, like, so we have CPI data coming out tomorrow. Like, if we just all of a sudden got like 0.8, 0.9 month-over-month inflation expectations, if they actually, not expectations, but an increase, for instance, then we could really start seeing the Fed really start to come in and crack down. We could start seeing those half point basis point rate hike, that sort of thing. But I don't think I don't think the Fed's wanting to freak markets out, that kind of thing. Now, I know they don't really care about what the market's doing because they think everything's overvalued right now, which a lot of things are. I mean, I don't disagree with that. And they really want to start bringing those prices down, because they're just overvalued. For housing, for instance, that thing. My goodness, that thing's just on a straight rocket ship, and then we're not even really seeing very many houses on the market right now, especially in my area. I mean, around the Kansas City area, it's just unbelievably crazy. The market. I mean, things aren't even on the market for hours right now, and they're gone. So, very tough market to buy in. Obviously, a seller's market. Whenever you have a seller's market, prices tend to go up. Supply, demand. So anyway, let's get back to CPI data. Now, the expectations for month-over-month CPI data tomorrow, that is 0.4. So a month-over-month basis of 0.4%. I like that. I think that's not a terrible month over month basis. Now, obviously, we want to start seeing those point twos come in, that sort of thing. I think that's whenever we could really potentially even see the market rally even more. The Fed will definitely be lightening up about what they're going to do, that sort of thing. And one thing I really want to talk about, and this is where I think that we could really start seeing this rally go even higher. Now, I don't believe that the stock market's just going to the moon here in the next several months before the first Fed meeting. Now, obviously, I could be wrong, but I just believe that if we see some CPI data coming in right out of expectations, I don't think that the market's going to really do much of anything. It's kind of already priced everything in, besides obviously worst case scenario. Now, if we start seeing those increases creeping up, that sort of thing, we could definitely start seeing some pain, some nice corrections coming through the stock market, that sort of thing. But I do believe, though, that it's just going to be kind of a sideways trading cycle for the next several months until we really start seeing CPI data, that sort of thing. But I do believe, though, that these rate increases will be helping, especially this first one and second one. I do believe once that second one gets put in place, which the Fed will be meeting the May 3rd and 4th. So that's going to be a big one. We'll get to see kind of where inflation's at in April, that sort of thing. And they'll be able to kind of judge it off that. Should be a really good indication of where we're at. Is inflation is it starting to slow down? GDP growth, are we starting to slow down as well? That sort of thing. And I think this is where we could really, really, really start seeing a rally. Because I don't know if inflation is going to go as high as what a lot of people are expecting. With the stimulus going to be coming to an end here, a lot of people are already getting here very shortly their last stimulus checks, child tax credit, that sort of thing. We're going to start seeing all this stuff kind of come to a close. I believe that people are going to really start running out of money. And now that's obviously not going to be good for GDP, but it's going to be good for, like CPI data, for instance. We're going to start seeing some prices come down. Hopefully, and even in the housing, not really going to bank on that. Just with how competitive it is right now. Now, I do believe it could end up squeezing out a lot of the middle class people buying houses, that sort of thing. But we'll all see. I'm really excited to see how this is all going to kind of pan out. Is this going to really run a lot hotter? I know a lot of earning reports, for instance, a lot of companies talking about how they have pricing power right now, which is not really, really good for inflation, but obviously, there's just a lot of money to be spent out there in the economy right now, which is a great thing. But also, we just, wage increases, that sort of thing. We're really looking for this labor market. It's a tight labor market right now. Companies giving out big bonuses, obviously raises going on right now, that sort of thing. So we're going to start seeing these pricing powers continue probably coming up. Until a lot of people come back to the workforce, which I really believe that this is kind of right around the corner. We're going to start seeing a lot of more COVID restrictions lifted, like, for instance, New York, California, that sort of thing. They've already talked about that. A lot of restrictions are going to be lifted here, actually really just in the next several weeks. So we can start seeing people, migrating back to the workforce, I believe. Also, a lot more people kind of going out, feeling more comfortable, that kind of thing. All this stuff is going to be good for the economy. This is just my opinion. And that's why I've been really buying REITs, a lot of REITs right now. A lot of recovery stocks as well. Seeing a lot of good things that are coming over this next several months. Now, hopefully we can get this inflation under control. That's what the hope is. But we'll kind of all have to see how this all pans out. These next few CPI datas are going to be pretty big. Not quite as big as what we get from the Fed meeting from May to June. Now, the Fed will be meeting for a third time, June 14th and 15th. And that's when I can really, really see a big, a big rally if we start seeing some inflation pressures come down. The Fed's not really as worried about inflation, that sort of thing. But again, we'll have to just kind of see how all these things pan out. We'll be getting Q1 earnings report, during that time, that sort of thing. We'll already know exactly how companies are doing. I really like this. I think this is going to be big. I think it's going to be a good time to invest all throughout that Q1 earnings. I do believe that they'll be slightly lower. So we could see a nice little bounce back to the downside. But if inflation pressures are coming down, my goodness, I think that we could just see a nice, really big rally. And that's what I'm hoping for. As I said, I've been investing a lot in recovery stocks. I've been investing a lot in REITs right now. That sort of thing. I sold all my energy stocks just because of these recovery stocks just going down so much. I mean, my goodness. We saw tech even go down so much. We saw DraftKings, for instance, just one right off the top of my head. I mean, this thing ran all the way up to $65 a share. Came all the way back down below 20, and I was like, oh my, I have to buy this. So I sold all my energy, and I started rotating to these kind of stocks that I was talking about. Stuff that I actually have recommended on this channel, actually in my last video. So if you go back, watch that video, kind of what I recommended, you'll be able to see everything that I've recommended. What I kind of expect for inflation, what kind of stuff I'm buying to fight with inflation as well. Bought some apartment REITs as well, that sort of thing. And we're going to see casinos, Wynn Resorts. I love that one. That one's going to be a big one for me. I'm pretty sure. Bought that around $83 a share. Right now I think it's a 93, something like that. But I think that's going to be a big one for me this year. Hoping to maybe get a 50% gain on that one. I think it's easily possible. So we'll see what happens. I think this is going to be a big year for the market. I think this is going to be just as much, if not a little bit better than 2021. If you invest in the right areas, if we start seeing some inflation pressures come down, that sort of thing. So I'm really excited to see what happens. I will definitely be letting you guys know exactly what I'm doing. That sort of thing, what I'm buying, what I'm expecting, that sort of thing. So thanks for watching.